Awesome. All right. So thank you everybody for tuning in to tonight's webinar. Today's topic is going to be how to trade less and profit more. My name is CJ. I go by CJ Nieves Official on Instagram. You can go ahead and check out my page there. If you guys have never heard about us before, I am the founder of a company called Pivot to Profit. We run a Forex educational community and teach people how to trade in the Forex markets, develop their own trading plan. That's why they can be more accurate in the market and focus on not just my strategy and really just develop their own personalized strategy, because everybody trades completely differently and has different lifestyles, different times that they're jumping on the market, different psychology even. So it's always important to develop your own personalized training strategy. And that's been my mission ever since I started this around a year and a half ago, was to help as many people develop their own trading strategy that works for them instead of trying to adopt somebody else's strategy that may not quite fit into their lifestyle or the way that they view the markets or their own personal psychology. So with that, getting started, how to trade less and profit more is kind of a little theory that I came up with and wanted to really just explain this better to you. Sorry about that. If you could just make sure your mics are muted if you guys are tuning in live. Thank you. So there's a couple bases behind this that I'm going to go ahead and pop up right now. The first thing is you have to have a certain mindset when you're thinking about how to trade less and profit more, because everybody thinks that we need to be on the markets 24/7 in order to be profitable. And the whole point of being a Forex trader or any sort of day trader is to really have that time freedom to be able to go out and do the things that you love to do. Because not everybody's passion is to go ahead and look at charts all day. I understand I'm very passionate about it, which is why I teach people. But not everybody's passion. Some people just want to do this as an extra source of income. Some people want to do this so that they can fund some sort of other dream project of theirs, whether it be opening up some sort of business, investing in real estate, doing whatever. So this might not be your main passion, but it can be a means to reach that other passion. But you have to have a certain mindset. People think, oh, I need to be trading 24/7. Well, then you're not able to do anything else with your life. And then what's the point of making all this money in the Forex markets? The goal is to trade it as little as possible. And by doing that, you can actually profit more. So really there's a quote by Warren Buffett. I'm not quoting him exactly, but he said in an interview that you only need a handful of opportunities in your lifetime to become extremely, extremely wealthy. And out of those handful of opportunities, you may only need one or two of them in your life to actually become extremely wealthy. So you have to keep that same mindset in the Forex markets, that every day that you jump on the Forex markets, there might not be a great opportunity for you to enter into a position. There might not be a great opportunity for you to take a trade. There might not be a good risk versus reward. So also the next thing that you need to think about is that every trade that you're entering, that you're pressing buy or sell or buy limit or sell limit, buy stop, sell stop, that you are putting your account at risk. All right. And the whole point of trading is to gain wealth, is to gain money, is to increase your account size. And the way you do that is by putting statistics in your favor. That's all it is. It's not about being some master at the Forex markets and being able to analyze the charts perfectly and having a 90% hit ratio. It's not about that. It's about being statistically at a statistic advantage. So when you put your account at risk over and over and over and over again, and you take 7 trades a day, you're putting your account at heavier risk than it needs to be in order for you to be profitable. You can take 1 trade a day or 1 trade a week and still be more profitable than somebody who's taking 20 trades a day, 30 trades a day, whatever it may be. So I want to put myself at the least amount of risk as possible. The last thing as far as mindset goes is that risk management is always number 1 and risk to reward is number 2. Everything else comes after that. Your trading plan comes after that, your technical analysis, your fundamental analysis, everything else. And risk management and risk reward goes a lot into psychology as well, which we're not going to really get into this, but you really need to focus on managing your risk, which means placing an appropriate lot size compared to the account size that you have and how much pips you're risking on that trade. And the next thing is your risk to reward. I'm not going to risk $100 to make $80. I'm not going to even risk $100 to make $120. The only thing that's going to make it as a statistical advantage to me is that if my risk greatly exceeds, or my risk is way less than my potential reward. So my reward greatly exceeds my risk. So for me, that is looking for a minimum of 2-to-1, ideally 3 or 4-to-1 risk reward ratio before I even think about taking a trade. All right, so there's a couple of rules to be able to make this theory of mine that you can trade less and profit more work. All right, so here they are right now. First, you always need to identify your long-term bias. Without your long-term bias, you're not going to know the overall direction of the market. Without knowing the overall direction of the market, you're really just throwing darts blindly at the market, hoping that you have the right direction. All right, whether you're a scalper, whether you're an intraday trader, whether you're a swing trader, whether you're a position trader, you need to know the overall long-term bias of the market. Because when you're trading in the overall long-term direction of the market, whether it be on the short-term time frame or a long-term time frame, you have a much higher chance of winning that trade statistically every single time. Always identify your long-term bias. Next thing you want to do is decide what time frame you want to focus on. If you are new to trading, I suggest going to the higher time frames first. The charts are much cleaner. The movements are a lot less sporadic, where you have constant up and down, up and down, up and down. And it's just going to be a lot less stressful for you than trading on the 15-minute time frame and having to check your charts constantly. It's just not worth it. And our goal is to obviously trade less and profit more, which means that our goal is to spend less time on the charts and still have the same or more profits. Okay, so I'm trying to help you guys spend less time on these charts once you get the skill set and still make good money trading. Next thing in the rule is that you need to only trade when there's a clear directional bias. So if I identify that the monthly outlook for Euro AUD, which is what we're going to be looking at today, is bullish, then I only want to trade when the market is bullish, which means when I see that on that time frame that I'm trading, that the market is also going up. And then the last thing is when the price comes to long-term price zones. So areas on the monthly, weekly, and daily time frame where you see that there are big reversals, you need to wait for your lower time frame confirmations for a change in direction and a change of trend, which means this goes back into a video I did a couple weeks ago with you guys on not predicting and instead reacting to the market. We don't want to predict that price is going to reverse at this certain zone. We want to wait and watch what happens at that zone and then react to what it does after it reacts at that zone. So if it has a reversal at that zone, awesome. We're going to wait for the pullback and the change in trend so that we can then attack the market and go and follow the rest of the trend. If it breaks through that zone and continues in the same direction, well, then we're going to wait for a retracement back to that zone and then continue in the trend since it didn't reverse. So this goes back to our previous video that we did a couple weeks ago that you guys can go ahead and check out on YouTube, which is how to react to the market instead of predicting into the market. So really focus on these rules. If you need to, take a quick second to screenshot this, or this is going to be on YouTube so that you guys can watch this later again. So if you guys are watching this on YouTube right now, just go ahead, pause it, take a screenshot of this, whatever you guys need to do. All right, so now we're going to get right into this. So I'm giving you this example because I want to show you, we're nearing the end of the year. You know, it's October now. So I wanted to show you guys what opportunities we had on one currency pair, focusing on 1 or 2 time frames in the market since the beginning of this year. So if you had watched this webinar at the beginning of the year, what were the potential opportunities that you had to make money in the market with trading as little as possible while profiting the most? So in order to do that, we need to get an outlook on what happened, you know, back in 2018. So we're going to bring this out to the weekly time frame now. And we're going to go ahead and delete all of this nonsense. Awesome. And this was 2018 from here onwards. Before this, we clearly, obviously, in all of 2017 had a huge bullish trend. And before that, we broke this bearish trend. Now, I don't use trend lines to trade. This is just for a visual aid so that you guys can clearly see the overall trend. But I don't advise using trend lines in your trading plan. They can be really confusing because you can draw them 10 million different ways. This is just for an overall view of, you can see that this is clearly a downtrend. And then what I've done here is, since we're starting a new year, we want to mark the highs and lows from the major long-term time frames. Now, big thing to notice here is that I identified these 2 zones. So we've been in a clear uptrend on the weekly time frame for a while, since February of 2017, all the way until October of 2018. All right, we have been consistently making higher lows and higher highs in the market. Now, we can also notice one thing is that our higher lows and higher highs have not been as drastic of a change as they were previously. We can see very clearly that there is a big difference between this move and this retracement, and then this move again to this move, this very steep retracement, and then this move that barely makes a higher high. You can see that this is much more exaggerated. This is trending much nicer than it is here, which means that we're slowing down in this uptrend and that we're going to have less volatility and we could potentially even consolidate in this market. All right, so we need to keep that in mind going into the new year. And remember, this is as if you were starting in January 1st of this year, all the opportunities that you had. All right, we're taking ourselves back in time. All right, now we're going to the daily time frame. We know that we're at a clear level of resistance that we've reversed to before. And like I said, yes, we're in an uptrend, but we're not going to predict whether this is going to reverse and completely change in direction because it's slowing down, or if it's going to continue to break higher. We're going to watch what happens at this price zone and then decide where we can potentially take a trade. All right, so looking at this, we're going to see the candle start to print. All right, first signal right here that we may not go bullish and make another higher high than this and continue in this huge push. This first sign right here is this huge wick right here that happened all at once. It just shot straight up on a daily candle all the way up. Let's see how many pips that was. 435 pips in one day, and then closed all the way back down right to where it opened, which means that price shot up, but then there's so many sellers up here that it pushed right back down. And technically, we did make a higher high right here than our previous high. So even if we were following that trend, we can now expect that we might start coming to the downside. Is this enough to take a trade? No, this is why I say trade less. We're gonna wait for more confirmation so that we get as accurate of a trade as possible. Plus, what is the idea behind trading? We always want to put our stop loss above the previous high. Well, do you want to trade with a 460 pip risk when our next support is at 536 pips? No, we don't, because that's only a 1.1 risk reward ratio. It's not worth it. So we're going to wait for a better opportunity in the market. Now we see that the market continues. Boom. This is a huge confirmation. Huge bearish candle on the very next day, showing us that there's a ton of sell pressure. Now, is this still this is a good confirmation that we're going down, but do we want to trade here? No, because we don't trade in the middle of an impulse move. This is a whole push to the downside. Now we need to wait for a retracement back up to this zone. So one, we can get better risk to reward ratio, and two, we can manage the amount of risk that we're going into this trade. We know that there's most likely going to be a pullback. Why? Because even if this looks like a super clean push to the downside, we know that on the 4-hour time frame, the 1-hour time frame, that there are all of these small pullbacks that are going on over and over and over again. And we don't want to get into drawdown because of the smaller time frame pullbacks compared to the larger time frame moves. Okay, so we're going to let this play out a little bit more. And we see right here, we start to get that pullback. We're getting a little bit of consolidation. Let's drop this down to the 4-hour time frame. All right, now we still are kind of just consolidating. We haven't seen anything clear yet. Still consolidating. We're making lower lows, but here we get that clear retracement. Now, this isn't a signal to buy, which a lot of people will do, and this is what I'm talking about, trading less. This is support. We get a buy signal right here because we have a bullish engulfing candle. But does this mean that we're going to go ahead and place longs here with our stop loss below here and then hope for this to come up? No, first of all, we don't get a 2-to-1 risk reward ratio. But even if we went all the way down to the 30-minute, 15-minute time frame and we got buys all the way down here and we get a 2-to-1 risk reward ratio. First of all, we're taking on more risk than we need to. Why? Because this isn't in the direction of the overall trend anymore. Yes, the overall long-term trend is bullish, but we had a reversal at this clear price zone after making a higher high, which means that the trend is now bearish and we're waiting for a retracement so that we can get the next push to the downside before we then continue on the long-term uptrend on the monthly time frame. But on our daily time frame and our 4-hour time frame, we are definitely in a downtrend. So we're going to wait for that retracement. So we don't want to take a buy there. We want to wait for this retracement to be complete. And we're going to continue printing candles. And yes, it does go bullish. Now, did we want to sell here? No, because let's follow our shorter term price action. We have downtrend, uptrend. All right, if we sold right here, this is intraday support. So where could we continue? What could we continue doing? Making a steeper and steeper retracement and going into drawdown until maybe we come up to here and then start selling off. So we need to have confirmation that price is breaking below this zone right here that we have on our intraday levels. So let's go ahead and do that and see what happens. All right, price is going down. Price is continuing that going down. And right here, this I like a lot. And people might say, oh, well, you're trading a breakout. This isn't a retest. In my opinion, this is going to be our confirmation that we not only had a daily push, but a 4-hour retracement on the 4-hour time frame. And now we are continuing in this trend. So we're going to go ahead and grab the rest of this move to the downside to our next level of support. Now we need to see, do I have 2-to-1 risk reward ratio? Nope, not a long position. We're going to go ahead and look to take shorts. Now, price should not break above 2 levels of resistance, in my opinion. So we have this level of resistance because now we've broken below it, and we have this level of resistance. So I'm going to put my stop loss right here, and we're going to go ahead and target down here. Now, I get my 2-to-1 risk reward ratio, correct? And we're going to go ahead and try to see how this trade plays out. And you can see now we're not in drawdown at all. We're continuing in profits. And we get a nice retest there as well. And price continues down. Let's go ahead, see if we can speed this up a little bit. Price continuing to come down, continue to come down. Let's see. Now we're getting into a little bit of consolidation. This is a lot longer than I'm going to want to hold a trade. However, we see right here, what is this? 180 pips. And if you would have held it, we got all the way down to a 250 pip target. And our total drawdown on this trade, let's go ahead and pause this. From the entry right here, our total drawdown was a total of 14 pips, 20 pips. And we went 176 pips in profit. Now, if you were to hold this whole time, our total drawdown on this trade was 85 pips, and we went down 228 pips. So I'm risking a lot less than my potential reward on this trade. All right, this is what we're looking for. But now, every time that you finish a trade, you need to go ahead and bring it back to your longer term timeframes. Now, obviously, we are still in a downtrend even on the daily time frame. I can go ahead and draw this out for you. We have a push, exhaustion, push, another exhaustion right here. You see we come right to that resistance level and come down. But now we're holding this support. So we need to wait, and this is another major price level once again. So what are we waiting for now? We're waiting to see what price does at this price zone because we know what are we in? We're in an overall uptrend, right? So now we're going to slow down. We got one good trade for the year so far with over 200 pips in profit, all right? 200 pips, if you did $1 per pip, that's a $200 trade right there. If you did a $10 per pip, that's a $2,000 trade right there. That's great to start off the year. And this is only one currency pair, okay? Now we get a clear reversal right here. Awesome. So what are we doing now? Are we taking buys right here? No, because we haven't reversed from this trend. Where's the previous high? Our previous high is right here. So until we've broken there, we're not looking to trade. So this is very simple. And yeah, there's not going to be, and this goes to show there's not going to be a bunch of trade opportunities every single day. Now we can see we're in clear consolidation, right? We're still consolidating. We're not making any serious moves in the market. We're basically overall still holding this level right here and not moving too much farther up or down. We keep coming back down to support. This is where those traders who trade on your 1 hour and your 30-minute time frame and your 15-minute time frame, you're identifying, you guys who are scalpers, your intraday traders, you're identifying this as your long-term zone and this as your long-term zone. And you're saying, all right, when price comes down to here and we get 1-2 confirmations, I'm looking to buy. When price comes up here, we're doing 1-2 confirmations and I'm looking to sell. But if you're focusing on your longer term time frames, we're just waiting. Now, if we're still waiting, what are we doing for all of these days? This is already all the way into April and we've only taken one trade. Well, this is only one currency pair. So I would recommend picking up, 3 or 4 currency pairs that you like to trade, and you're going to find more opportunities. But just on one currency pair, we've avoided being in any risky situations during all of this madness, all of this consolidation, because we haven't broken this zone and we haven't broken this zone yet. All right, so now price is going, and this is something that's very clear to me. All right, so now looking at the market, what's going on in the market right now? Let's go ahead and clear this up a little bit. We have support right here. We see that this is a nice downtrend. So if I drew this for retail traders who like to see stuff like that, this is a trend line, then price is breaking above, but something's very significant here that we haven't seen anywhere else during all of these months of price action. We see 1, 2, 3 very strong bullish daily candles. Now, we don't see that anywhere else near here. We see 1 super strong bullish daily candle right here. We see 1 here. We see 2 here. All right. We see 3 weak bullish candles right there, but we're at resistance levels. So we're at support, and we see 3 strong daily bullish candles, followed by really sloppy, choppy price action to the downside, which means that buyers finally took a bunch of positions right here and we're pushing higher. This gives me a good indication that I'm looking to start my buys. Now I'm just going to wait for a confirmation and then take the trade. That's simple. So let's bring this to the 4-hour time frame. And if I was trading this, because I never trade only on one time frame, we're focusing on the daily time frame, but we can take entries on a shorter time frame. So this was that push, that big push for those 3 days. Now here is the same thing that we're doing again. The same thing that we did on that ugly price action to the downside and we saw that big bullish momentum. We're doing the same thing now on a 4-hour time frame. Boom. We see that this is clear bearish price action, downtrend, 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 downtrend. Oh wait, are we downtrending anymore? We made an equal level of low. We made a higher high, a higher low, and then we pushed higher. So we can go ahead and buy anywhere above here. And where's our risk at now? Our risk is in total 45 pips. And now we bring this up to the daily time frame, and now we know that on our longer term time frames that we hit a clear daily level of support. We made another higher low marking on this, and this was our higher high. So now we're looking to continue to push higher. Now, do we need to go and try to take out these highs and these highs? We could simply take this up to the previous level of high. And look at this, 9-to-1 risk reward, which means that if you're risking 2% on your account, this is the trade, this is the opportunity that's going to make you 18%. Okay, so on that first trade, if we risked 2%, we only made 4%. And we waited for a long time, right? We waited for that very clear opportunity where we came to a lower low, we changed direction, we had a pullback, we had bullish confirmation, we entered on a 4-hour time frame after we were focusing on the daily time frame so that we can tighten up our entry and tighten up our risk. And now we can continue to hold this all the way up. And we can have take profit levels, obviously here where we start to put stop losses at break even, and then here, and then you could even leave a runner to try to keep it going higher. But let's say we were conservative. We just took it up to here. That's 8.8-to-1 risk reward ratio. So you're looking at 18% gain with a 2% risk. Now, where does price go? Just continue skyrocketing, right? This is those trades, those couple opportunities that you need to make a huge difference. Now, we know that this is our big opportunity. So if this is our big opportunity, what can we also potentially do? We can potentially look at other entries with less risk. So we risk 2% here because we know this is the most optimal entry that we're going to get. So when we just came from a clear major price zone, we just had a major push, a major correction on the 4-hour, and a nice clean entry. So we risk 2% here. But now let's say we risk 0.5% on future entries, and we put price below our previous entry. All right, and we continue just to the same take profit level. That's another 8-to-1 risk reward ratio. You risked 0.5%, and you have 8-to-1 risk reward ratio. That means that's another 4% profit that you have on this trade with almost no drawdown on this trade. All right, then we have another price zone right here, and it's hard to see because we have these here, but let's go ahead and just show you. We have another entry right here. And then we're taking advantage of that one big opportunity. And then finally, we have 2-to-1 risk reward ratio. So this is for those people who are more risky and want to get as much as possible out of the trade. But those other two that were 8-to-1 risk reward ratios, that just turned your account from having from January all the way to May, only a 4% gain to now having a 24% gain. All right. This is the big difference, that you don't need to trade every single day to get those big opportunities. You just need to wait for those really, really good entries and those really clear signals in the market so that you can take advantage as much as possible. We did almost nothing from January all the way to May besides check up on our chart every few days and see what's going on in the market, see if we have potential. We saw ugly price action. We stayed away from Euro AUD that day. We didn't trade it. And then finally, from our one trade opportunity in January all the way till April now, when we had that trade opportunity, we went from 4 to 24% ROI on this pair. And as we continue, there's a couple more than you see these highlighted zones that I already have here, but just to not drag this on too long, we see a couple more clear zones. We see, first of all, that we came up to these previous level highs, and we see 1 rejection, 2 rejection, and we broke below price, and then we see a retracement right here that we could have entered on the 4-hour time frame. Now this is against our overall long-term bias. So when we get those 2 rejections right there and we short here, well, we're marking out these zones and we're saying, all right, well, I'm going to take a short here after this bearish engulfing candle. Awesome. And we're targeting this price zone down here because this is a previous level of support where we had that big push and we had that retracement, and it's another higher low if we do come down to here. And this is counter trend, so we don't want to try to take this and say, oh, it's a reversal and we're going down back to zero. We're just completely negating the fact that we had a huge uptrend, and we're just going to start shorting forever for the rest of the year. No, we're going to take this and we're like, all right, well, if we continue in our long-term analysis, we're going to have a steep retracement to come down here, make another higher low, and then potentially go bullish again. So we take this is 3.8-to-1 risk reward ratio. We have a downtrend on our 4-hour and our daily time frame. All right. And just to keep this going, we see price breaks all the way back down, and we get, if we risked 1 or 2%, we're getting anywhere from another 4 to 8% on this trade. All right, so now we're up to 28% profit. Now we're at another daily zone. So we know, since we're at another daily zone, what are we looking at? We're looking at a potential big opportunity. We're looking at a big opportunity just like we had, a couple months ago back in April. Now it's August, okay? Let's go ahead and get out of this really quick. Refresh. Oh, we got a little spaz right here. All right, so my replay mode, and this happens sometimes on TradingView, unfortunately, which is a shame that their replay mode is a little glitchy sometimes. I was hoping this didn't happen today. All right, but just to go ahead and explain to you guys, and let's go ahead and start opening this up to questions, is that these are the small opportunities every single day that we're looking for. We're going on the market, we're going on the charts, we're spending a little bit of time looking at the pairs that you like to trade. If you like to trade during New York session, you're going to focus on your USD pairs, your CAD pairs. If you like to trade during Asian session, you're going to focus on your JPY pairs. Why? Because they move better during those time periods. And then you just check up on your charts once a day at those time periods. Spend a couple hours on the charts. Set some alerts up so that you know when price comes to these key important areas, and put yourself ahead of the market to where we're not predicting that price is going to do this or that at this certain price level, but we're expecting that there's going to be a big reaction because there was big reactions there in the past. So when there is a big reaction, now we're saying, all right, now is the time for me to stay focused, spend a little bit more time on the charts, get this big opportunity and get that good entry so that I can go and get that big trade. And there's only going to be a few of them throughout the year on each pair. There might be maybe 4 trades that are going to be like that throughout the whole year on one pair. But those 4 trades can make you huge ROI, and not because you're over leveraging, but because you put yourself in a great position in the market. You put yourself in a position to follow the long-term analysis overall. This is exactly what I'm talking about. So overall, as you can see here, this is the market outside of replay mode. This was that big bullish move that we caught first right here. Price had another retracement, came up and made a new high. We made a new higher low again, and this gave you another potential entry for that big trade of the year. And then we had a retracement, and this is overall so far what we've gotten for the year. And then some very slow price action from September all the way to October, and it's been like that from September to October on a lot of pairs overall. When we're looking at the daily time frame, the volatility from these past few months has been very low, and people have been trying to go crazy and make all this ROI when the market volatility just isn't there. There aren't amazing opportunities out there right now in the markets on your bigger time frames. So right now is just the time to sit back and relax and hope that you put in the work throughout the rest of the year to grab these few major opportunities. I'll show you exactly what the few major opportunities look like. Nope. This long position here. This long position here. And we're going to base these entries off of the 4-hour time frame, remember. And then we would have tried again at this position here when we have 1, 2 rejections, and we would have been in profit so far up to the current time period, but barely at 2-to-1 risk reward ratio. All right, the only other opportunities were at these major turning points to go counter trend to where we're risking less money on these trades because we know it's counter trend and we know that we're potentially making a higher low. But we had major rejections from major price structures in the past. So we're going to go ahead and try to take those trades as well. And this short right here, when we had this double top, this nice big retracement right here, and then price rejected right there and came back down to that daily level of support. So we see 3-to-1 risk reward, 8-to-1 risk reward, 4-to-1 risk to reward, 3-to-1 risk to reward, and 2-to-1 risk to reward. If we did 2% per trade on this, all right, we're looking at 6% plus 16%. So we're looking at 22% now, plus another 8%. We're looking at 30%. We're looking at 36% and we're looking at 40% ROI from one currency pair, and only taking less than 10 trades. We're taking about 5 trades on one pair throughout this whole year, and you're getting 40% ROI on your account. Now, where are you going to get 40% ROI anywhere else? If you take your money to a bank, you're going to get 40% ROI in 1 year, and the year's not even over yet. Now, if you go and you invest into real estate, are you going to get your 40% ROI in 1 year? No, you might get that ROI after 30 years, 40 years. By the time you retire, you might see those ROIs because real estate's a very steady industry. But we're not going to see that in 1 year. And this is one currency pair. You trade 4 currency pairs now. All right. I wouldn't try to do more than 4. You trade 4 main currency pairs. All right. You have about 5 opportunities a year. Now you're looking at 160% ROI on those pairs. Now you're not going to win every single trade, but those are the big trades. Now your other trades that you're trying to get these big entries on, and maybe you just messed up on something, is going to account for your 0.5% loss here, your 1% loss there, your 2% loss there. but overall you're profiting way more than you're losing because you're not putting yourself at risk all the time in the market. You're only coming into the market when you're extremely confident and you've done your planning, and you're waiting for not only price to come to that zone, but have a significant reaction and then have another retracement, so that you know that we're getting ready to change direction again or continue direction after we broke out. These are the things that we're looking for in the market to give us those huge opportunities. So you see, on Euro UD, if you would have traded 5 times this year, you're looking at 40% on your money. You had $10,000, that's a $4,000 profit. Now, that's not something that you can go ahead and live off of your whole life. No, but this is what I'm showing you, to where trading initially, everybody thinks that they're going to become a millionaire overnight, but they don't realize how significant 40% ROI is. All right. ROI is everything. And people need to start taking that and saying, all right, that's amazing that I just started trading and I was able to focus on these really good entries and get that much ROI. And then you can do it over and over and over again and make more money as you go, until eventually you're doing extremely well, building up your portfolio, building up the size of your account, and making more money. But look at this long term, be patient, wait for your entries, and I guarantee you it will pay off. Don't try to take every single opportunity just because you saw some post on Instagram, or you went to TradingView ideas page where there's 10,000 ideas a day, and you try to take 5 of your favorite ideas that you see from people that you see that you like their posts a lot in their analysis. It's just not worth it. There aren't that many amazing opportunities. And if it's not really that worth it, why are you putting your account at risk? It's not worth it. Don't put your account at risk if it's not worth the reward. I want to thank you guys for jumping on today. If you guys did enjoy this webinar, you guys got value out of it, I would really appreciate it if you dropped us, some sort of comment on our Twitter page, on our YouTube page, Instagram page, or just sent me a DM on what you guys thought about this on Telegram. If you guys are interested in starting to learn from us, make sure to check out our website, pivottoprofit.com. I'm going to go ahead and drop that link over in the community chat that you guys all have. I want to thank you guys so much for being on. If you guys are watching this on YouTube, thank you so much. Drop a comment if you guys got some value from this, and I really hope to see you guys next week for our next webinar. Have a great week, guys, and I'll see you guys later.